Hello classmates. Thank you for taking time to watch my presentation on some relatively recent tax law changes that took effect in 2013. Today's topics include same-sex marriages, capital gains rates, and net investment income tax. Capital gains rates were changed to pay for Obamacare, and net investment income tax was also enacted to pay for Obamacare. Same-sex marriages. In a landmark civil rights case known as the Windsor decision, Windsor successfully litigated and argued all the way to the Supreme Court for a state tax exemption for the surviving spouse. The result of the case was that the Supreme Court found that using the description heterosexual union as a description of marriage or spouse was disparaging, illegal, and a violation of the Due Process Clause in the Fifth Amendment. Filing status for same-sex marriages is married filing jointly or married filing separately. Registered domestic partnerships and civil unions do not qualify. Amended returns for previous open years can be filed. What's important to consider are estate and gift tax planning, military benefits, not on the screen, and Social Security implications. State and gift tax have a wide range of topics and offer a wide range of planning opportunities. Military benefits should be considered if you're advising clients but are beyond the scope of this course, and Social Security implications to consider is that when there's a higher earning spouse that's receiving a higher benefit and the other spouse is at least 62 years of age, they can attach to the other spouse's benefit and may receive a higher check. Capital gains rates. Capital gains rates went from 15 to 20% in 2013. The 20% rates starts on income that would otherwise be in the highest tax bracket of 39.6%. The 39.6 bracket starts at the numbers listed under the 2017 threshold. What may be interesting to all of you number crunchers out there is that if you were single and made $400,000 in 2013, that's where the 39.6 bracket started. So you can go back and do the future value of 400,000 to 418.4 over 4 years and figure out how the tax brackets are indexed. What's important to consider, besides that trivial pursuit, is that when you're advising clients who may be harvesting a capital gain and they're high-income taxpayers, you would be smart to advise them that they probably have a 23.8% tax bracket because of the net investment income tax. The net investment income tax is an additional 3.8% tax on unearned income. The threshold when the net investment income tax starts to kick in is $250,000 married filing joint, $125,000 married filing separate, and $200,000 for single taxpayers. Net investment income includes interest, dividends, annuities, royalties, rents not derived in your ordinary course of business, passive income derived in a trade or business, gains attributable to the disposition of property not held in a trade or business. What's important to consider when looking at net investment income tax is that there are allowable deductions that are computed on Form 8960. Namely, tax prep and advisory fees reduce net investment income. Here are some discussion questions that you may find interesting. If you were single and near the age of 60, would you enter into a same-sex marriage to save on taxes or to increase your Social Security benefits? Do you think anti-shelter doctrines such as economic substance or business purpose would render structured same-sex marriages ineffective? What type of planning would you use to make your investments in privately held companies active instead of passive to avoid the net investment income tax? Hope you enjoyed the presentation. This is a review section for my firm, CPA Firm South Florida. If you enjoyed the presentation, please give me a positive review to help my business. Thank you and have a nice day.